Intel stock is up over 101% in 2025. And of course, I'm happy about that. I've been recommending Intel stock as a buy all year long. Multiple times I reiterated that buy rating up until a few weeks ago when the stock rose around $37, $38 a share. I informed investors that the price was already incorporating a lot of the positive prospects, and I downgraded the stock to a hold. The stock is down almost 8% today, but to $40 per share. And now I'm looking at 2026 and evaluating whether or not I think Intel is a buy for the new year. I'll answer that question in this video.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So one of the things that investors are hopeful about Intel is that its foundry business is gaining new customers, and there's been speculation about several big name customers joining Intel, purchasing big quantities of the company's semiconductor capabilities, including NVIDIA, Apple. There's been some rumors and some indications that the company could win some major customers, especially because the current administration in the United States is trying to encourage manufacturing of semiconductors in the United States. And the companies I highlighted earlier, including Apple, NVIDIA, AMD, and others, are notable for manufacturing and outsourcing their manufacturing overseas to places like Taiwan Semiconductor Manufacturing Company and others, and the U.S. administration wants to onshore that activity. And so it's a popular move for those large companies to sign a deal with Intel, and then they can go publicize that, and they can go to the administration and say, look, we signed the deal with Intel for a couple of billions of dollars. Now, what we would like from you is please give us exclusions on tariffs. Please give us some ability to export some of our technology, which the administration has restricted. And so it's a popular way for those big companies to gain favor with the current administration. So those negotiations are ongoing and will likely continue as the administration tries to encourage more manufacturing in the US. Intel is likely to be one of those beneficiaries. Intel has spent several years spending tens of billions of dollars upgrading its technology to try and get it on par with some of the best manufacturing companies in the world. It's still well behind those like Taiwan Semiconductor in capability, but it doesn't need to be the best because it has this big tailwind now of an administration that's really encouraging and pushing companies to bring back manufacturing to the United States. But you can see here in the revenue chart, Intel's revenue has taken a big toll. It's losing market share in several categories, including personal computers and data centers, which are now being switched over to optimization for GPUs instead of CPUs, and that's been bad news for Intel. So you can see with the decline in the company's sales, coupled with their aggressive investments in manufacturing, their returns on invested capital have collapsed from levels near 20% in 2018 all the way down to negative 12% in 2024 before rebounding to negative 2.2% in the most recent period. Of course, this collapse caused the previous CEO, Pat Gelsinger, his job, and he's been replaced now, and the new CEO has been more focused on being more prudent with the investments in capital expenditure, with the investments in manufacturing and expansion and technology. And the market has liked that more prudent approach instead of the approach from Pat Gelsinger, which had been, it's code red. We need to put all our resources in this. We need to spend tens of billions of dollars because we're so behind that we need to catch up and we need to do this urgently. Otherwise, we could go out of business. That had been the message from the previous CEO, and that cost him his job. The market didn't like that. The initial results were not positive enough, even though these investments take years to start seeing results. The CEO was forced out, and now the new CEO is trimming down those ambitions and trying to monetize whatever they've invested in so far, rather than continuing those large capital expenditures. So along with the returns on invested capital, the cash flow from operations to sales ratio had also collapsed all the way down to 15.6%, down from levels above 35% for several consecutive years. Now, I don't think Intel's cash flow from operations to sales ratio will surpass 30% anytime soon, probably not in the next 2 or 3 years. Maybe longer term, 5 years or longer, the company could regain those levels of output, those levels of margins on their cash flow compared to sales. Once all of their investments are up and running, once they perhaps sign some big name customers or gain broader adoption of their foundry business, or find the resolution to the foundry business. If they're not getting adoption from customers, do they maybe consider a sale to somebody else of that segment, and then thereby the business can be better balanced and generate better margins? So as Intel's stock price has increased, so has the company's valuations. And when measuring on a forward PE basis, Intel is now trading at near the most expensive it's been trading for, according to this metric, at 95. But Intel's valuation metrics using market multiples are all out of whack because of the significant investments in manufacturing, because of restructuring, job cuts, sales of certain segments, etc., etc. So it's less informative viewing Intel's valuation based on the market multiples method. So I lean more on my intrinsic value calculation using my proprietary discounted cash flow model, which calculated a fair value for Intel stock at $29. Current market price is $40, even after that 8% decline today. So while I'm happy to see Intel's success, the valuation right now makes it unattractive for investors in 2026. And so I will be reiterating my hold rating for Intel stock for 2026. Hey, if you value my process for researching stocks, I think you'll appreciate access to my spreadsheet containing my discounted cash flow valuations, which calculate a fair value for over 200 companies. It answers the question, what's a good price to pay for a certain stock? You can get access by joining our channel at the investor tier or above. See the link in the description or click the join button below to learn more.